What is weighing on markets right now? Is it the Fed? We're all waiting for Jerome Powell to take the microphone here in Jackson Hole this afternoon. Is it geopolitics? Is it the affair between Russia and the Ukraine? We'll have to find out. I've invited a phenomenal guest today to the show. His name is Dr. Richard Haass. He's a distinguished diplomat and also President Emeritus of the Council on Foreign Relations. So nobody better to discuss what is weighing on markets and the gold price and other factors as well. And of course, you can probably guess it. We'll have a heavy focus on the geopolitical side today. I'm really curious his take on potential China's involvement in the Ukraine as a security guarantor. What does that mean? Does it have any impact? Does he have any significance? We'll get to the bottom of it in a few short seconds. But before I switch over, hit that like and subscribe button. It helps us out tremendously. It's a free way to support our channel, and it means a lot to us. So thanks so much for doing that. Now, Dr. Haass, Richard, it is a great pleasure to have you on the program. Thank you so much for joining us.
Good to be with you all.
Yeah, really looking forward to this. As I mentioned to you before hitting the record button, I think we need to set the groundwork a little bit, or do some groundwork, and really define the current world order and where do you think things are headed, and then we can go a little more granular and talk about little crises here and there. But what is your current world order from your perspective, Richard?
Well, since this is a financial podcast, if there were a share of stock called World Order LLC, it would have suffered something of a correction over recent years. Any number of reasons. One is the war in Europe that's now in this phase, well into 3.5 years. A Middle East where, while parts of it have been perhaps sorted out, still some immediate questions like Gaza and the West Bank, and long-term questions between Israel and Iran that are very much an open question. China's rise and what it plans to do with its power, particularly given its interest in Taiwan. Probably the biggest question for world order is the United States, what sort of a role it plans to play going forward. It's played a central role for 80 years, built a close network of alliances, supported international institutions. A lot of that can't be assumed. And then as if that weren't enough, you've got everything from the emergence of new technologies and the like, what it's going to mean, and so forth. So for those in the business or financial world, I simply think that the assumptions they could make in the past, that things would pretty much be the same tomorrow as they are today, that things would be more stable than not. I don't think people should be as comfortable making those assumptions going forward as they have been in the past.
Yeah, definitely. Like, the level of comfort, or our comfort levels, have been shaken up quite severely here. Markets seem to be nervous as well. But what do you think is having the biggest impacts right now? I started leading with the geopolitical side, but what do you factor as the biggest impact of right now?
I actually don't think the geopolitics have the biggest impact, though. Again, it's always a context for markets, and geopolitics history shows have a way of intruding, particularly when things get particularly bad. No, I think, again, it's the United States, its uncertain role. I think the tariff policy, quote unquote, has had an enormous impact. Projections of lower growth in the United States and the rest of the world, the uncertainty and so forth. I think that's probably a bigger factor than anything else. And you mentioned before Jay Powell, obviously uncertainty about American interest rate policy and the relationship going forward between, among other things, inflation in the United States, tariffs, and again, interest rates.
How do you think monetary and fiscal policies in the U.S. are being dictated by geopolitics? Meaning, what is sort of the end goal? Where does the U.S. see itself in 5, 10 years, or 20 years down the road?
Well, for the most part, I don't see those policies being dictated by geopolitics. In a funny sort of way, the people who do macroeconomic policy and the like tend to do macroeconomic policy and the like. The people who do geopolitics tend to do geopolitics. It's almost like a university, and they each have their departments. They're somewhat siloed. And unless things get really extraordinary in one of those silos, I think people end up working more within the confines of the world they're familiar with. So a Jay Powell or the Fed is going to be looking at traditional economic indicators and nothing going on right now in the geopolitics. Even, we can talk about it, even if there were to be something positive in Ukraine, I don't see that as fundamentally affecting what the Fed would do.
Yeah, it's interesting. You're talking inflation, employment are the two main mandates for the Fed, of course. Tariffs seem to be having an impact, slowly seeping into the CPI data here as well. What is your take on the impact of tariffs here, and how should the Fed sort of factor that in, given also that China is looking at deflationary pressures here?
Sure. Look, I think tariffs are already showing themselves up in the production numbers, the PPI. I think there's a greater lag in the CPI, but it's going to show up. And my guess is the entire emphasis on the tariffs is one of the factors that has led the Fed to go more slowly than, among other people, Donald Trump would like to see. That they're nervous about lowering rates decidedly or decisively, in particular because of the sense that there is a lag effect from tariffs. They will boost inflationary pressures in the United States. So I think that's simply part of the trade-off. And again, my enthusiasm for our tariff policy, shall we say, is limited, to say the least. But it's simply, President Trump believes in them, and I think now they've become structural. We're debating how high tariffs will be for how long, not whether they will be.
Yeah, the tariff debate is an interesting one. We've had guests on that say, yeah, tariffs are fantastic. It's a great tool to put some leverage onto our trading partners, to even the playing field a bit more. It sounds like you're against that narrative, and you think it's just counterproductive. Am I correct in that?
Yeah, I believe tariffs can be a useful instrument, but only in very select circumstances where you have evidence that a trading actor is subsidizing or dumping or is blocking your exports to its country. In those narrow, specific situations, I think tariffs can be justified as a tactical response, if you will. But tariffs as an across-the-board strategic policy, I think, are not just inflationary; they're a very expensive way to do business in terms of protecting domestic industries and the rest. I think they're actually bad for American competitors. So no, I have very little enthusiasm. That doesn't even get into the geopolitical consequences of tariffs. The fact that they're so often used against our friends and allies is geopolitically, I think, truly counterproductive.
Yeah, you just used the word competitive, and I was going to ask you as a follow-up, like, how competitive is the U.S. on a global scale right now? Is it competitive?
Well, we are competitive, mainly, though, because of what we've done in the past. We still reap the benefits of past policies. I wonder, I worry, and that's a little bit unfair. We're also competitive, given we still have enormous talent, whether it's in Silicon Valley and biotech, what have you. But we're hurting our universities. We are reducing dramatically funding for basic research. Our immigration policy is discouraging some of the most talented people in the world from coming here or staying here. So what I worry about is that we're eating our seed corn. That American competitiveness 5, 10, 15, 20 years hence is diminished because of policies that I believe are remarkably short-sighted being conducted now.
Yeah, you've been arguing that the biggest enemy or the U.S. is fighting comes from within. It's a domestic enemy. It can be, like you've been referencing the U.S. debt situation as an example, but now policies like immigration policies are a struggle as well. Where do you see things trending? Like, do you see there's a change? Like, is this just a momentary blip on the radar screen, or is this a longer term trend?
Well, you mentioned debt. I don't see that as a momentary blip. I haven't checked my debt clock this morning, but we're in the zip code of 37 trillion. As a percentage of GDP, what are we, about 125, give or take? I see no reason to believe that's going to improve. The politics simply aren't there. The only question we could have a conversation about or debate is how fast it will go up in either absolute terms or in relative to GDP. I think it's unfortunate because, as rates stay relatively high, we now spend more in this country on servicing our debt than we do on our military. And certain other parts of what we spend in the budget on entitlements, on Social Security, Medicare, Medicaid, and so forth are very, very hard to decrease, particularly as Americans get older. So I think we're facing a future where discretionary spending gets squeezed. So even without a bond crisis, a bond market crisis, I think our debt puts a real ceiling on our economic performance over time. And then there is the potential, obviously, for a crisis and all that would mean. But again, I just don't see the politics of either building a consensus to decrease discretionary spending, to increase taxes. And one of the really nutty things that we've done, I believe, is our reduction in the capacity of the Internal Revenue Service, our tax collector. And so our ability to collect revenues now is diminished because we've so reduced the funding and staffing of our Internal Revenue Service.
Staying on the debt topic here for a second, it's undermining credibility on a global scale. The world is looking at the U.S. $37 trillion, which is an insane number. Debt to GDP ratio closer to 130 now as well. What does that mean for the currency, the confidence in the bond market? You were talking about that or touching on that as well. Can you elaborate on that?
It's a question I'm wrestling with as well, but I think your first point's spot on, which is it raises questions about our financial stewardship. The United States has this outsized role in the world. The dollar is the reserve currency. What happens here with interest rate policy ripples through the entire global economy. What we do or don't do in our trade policy, again, has an outsized influence because we're still, a quarter or so of the global economy and GDP. So I think our debt situation and our politics more generally diminish confidence in the United States. The fact that we go through this drill regularly about whether we increase our debt ceiling, again, puts the entire world on notice that American politics may not be, responsible or serious. And I think you have to look at two scenarios. I've been thinking a lot about this. One is the one you alluded to. One day, there's a crisis in the bond market. We have to raise rates here, not in order to cool an economy, but in order to attract funding or so forth. That raises questions of default. There's also concerns about whether there might be an effort at some point to inflate our way out of this and so forth. And then there's, even without a bond market crisis, just this reality that the United States has what I would call a kind of slow motion crisis with a 37 trillion and rising debt, and all that means for for our reputation and for our economic performance. So I think it's a real overhang. But again, I wish I could say otherwise, but I don't see the political impetus to do anything about it. The really interesting question is, would it take a crisis to do something, and might that bring people across party lines together to do some of the work on taxes and spending that right now is impossible?
Do you think the White House or the politicians in Washington understand that the U.S. dollar is under attack, meaning that potential other competitors like the Chinese yuan or so are on the rise? They're discussing now stable coins backed by the renminbi. Do they factor that in at all? Is that a notice of concern there?
Well, a couple of reactions. One is there are those in Washington who like the idea of the dollar being somewhat weaker in terms of improving our trade position. So I think, I haven't checked the numbers recently, but the dollar's position has gone down, north of 10% over the last 7-8 months since President Trump entered office. And there are those who'd say that's fine, that a strong dollar has been an impediment to the U.S. Trade position. We are, and you're right, correctly at a time. Two things are going on. One is the new technologies, stable coins you mentioned, and other things. Digital currencies are proliferating. And because the United States has not just raised questions about its financial stewardship, but what some have described as the weaponization of the dollar because of financial sanctions, I think there is a kind of secular drift away, very, very slow, from a dollar-centric world. At the moment, we're still dominant. You mentioned the Chinese currency. The Chinese are still not converting. They're not open. So I think, to use the old expression, in the land of the blind, the one-eyed man is king, and the dollar, for all of its imperfections, is still the one-eyed man. It still dominates. But as I said, I think there is a secular trend diluting dollar domination. And to go back to what Giscard d'Estaing once said, the dollar's role does confer on us exorbitant privilege. And I don't think people here are sufficiently sensitive about the consequences of the dollar losing its prominence.
What is the pace of that, where you just mentioned the dollar losing its prominence?
A good question. I don't have an answer to that. At a minimum, it's gradual. The real question is whether crises or developments happen that accelerate it. And that's possible. I don't have a crystal ball, but I think you'd have to say, again, the secular trend is reduced centrality for the dollar, but very, very gradual, in part because there's no good competitor that's come out. The real question is whether there's crises that accelerate this. And that I don't think either one of us can rule in or out. I wouldn't be shocked, though, if it were to happen, but it doesn't happen until it happens.
No, that's very true. Like little by little by little, and then all at once, right?
As
Is the
Mr.
famous saying.
Hemingway said about going bankrupt. Yes, sir.
Exactly. If you boil it all down, I had Michael Avery on the show the other day, and he said if you boil it all down, it's U.S. versus China. If you really look at the meta, whatever it is, whether it's the tariffs, whether it's geopolitics to a degree, it really boils down to U.S. versus China. Would you agree with that statement? And would you expand on that?
It's a little bit simplified. Look,
They're
China
very
and
simple,
the United States are the two most significant countries of this era of history. But look, we haven't talked about it. We don't have to. But Russia is obviously a major force in Europe and selectively in some other parts of the world. In the Middle East, countries like Iran have played a large role. Israel, obviously, Saudi Arabia. So if you go around the world, but yes, China is the one country that is a global competitor of the United States. It's built up its conventional military forces and continues to. It's the world's fastest growing nuclear arsenal. China has a large economic footprint in the world through its trade and its development policies, Belt and Road, what have you. It represents in many ways something of a political, ideological alternative to the United States. And all this is without mentioning the possibility of geopolitical friction between the United States and China. And look, what's so interesting at the China-U.S. relationship is unlike the U.S.-Soviet relationship during the 4 decades of the Cold War, Soviet Union was really a political military challenger to the United States. China is also the economic challenger. It's the world's second largest economy. It's everywhere. It's making massive state investments in select sectors of the economy, all of which I think to one degree or another will pay off. So yeah, China and the United States occupy a special, shall we say, position in the world. And the question is to what extent and how do they manage their relationship going forward, and how is it hopefully it avoids spilling over into confrontation? How do they manage a very competitive economic relationship against this backdrop of geopolitical competition? A lot of big questions.
Lots of big questions, exactly. Like, how close are we to a military conflict with China at all? Like, it doesn't feel like we're in the middle of a Cold War just yet. A lot of saber rattling more on the economic side. Tariff embargoes, like meaning extremely high tariffs that are similar to an embargo. What does it look like?
I don't much like the phrase Cold War with the United States and China because, again, China is so present economically, unlike the Soviet Union. And the U.S.-Chinese trade relationship is enormous. And words like decoupling ought to be jettisoned because there's no decoupling that's going on or going to be going on. And even recently, areas of export controls here are being somewhat reduced. So again, I think the reality and the likelihood is China and the United States will maintain a large economic relationship as they compete ideologically and geopolitically. But no, I do not believe we're on the precipice of any type of military confrontation between the United States and China. China still wants to build up its military. China's purging, as I can best see, a lot of its senior military. That will slow them down. I think they want to learn the lessons of the Ukraine war and incorporate them into their military. China also, if you think about it, they want to see what they can get diplomatically from the United States. You haven't had a meeting between Presidents Trump and Xi Jinping. So my guess is China is curious as to two things. One is, what is the United States ultimately going to do vis-a-vis Russia? How committed is the United States to supporting Ukraine, to opposing the idea that territory can be acquired by force? And then translating that, what is the United States prepared to do to back Taiwan? What is the United States prepared to do vis-a-vis China geopolitically? So I think it's way premature for people to think that China is going to act militarily against the United States. I think they're trying to answer a lot of questions before they'd even begin to think about going down that path.
Yeah, what is the U.S. stance on Taiwan right now? It feels like it's what we call it, there's a bit of a horse trade involved. It feels like if you leave Russia alone, maybe we'll give you Taiwan. I've been hearing various rumors about that. If you stay out of Iran, maybe you can have Taiwan. Like, I'm just throwing like phrases out there and rumors I've picked up, over the recent months. What is the stance on Taiwan? Is the U.S. coming to the defense here?
Well, look, for since the United States established a relationship with Taiwan 40, 50 years ago, the policy has been one described as strategic ambiguity. Taiwan could not be certain we would go to their defense. China couldn't be certain that we would not. That's still the official policy. I think there's probably a little bit more ambiguity given the nature of the Trump administration. Its willingness to go to bat for allies is structurally a little bit more uncertain than it was. But I think that reality is still there, that China can't assume what it is we would do or wouldn't do. And the real question is whether at some point they decide to test that. And that's possible. I don't see it as imminent, but I'm not going to sit here and say they're not going to do it at some point.
What are the odds of the U.S. and China actually reaching a tariff agreement? Constantly, we're seeing extensions here, but nobody's really inching closer to a deal. What are your expectations here, and what do you think the implications could be from a deal?
I would think ultimately there's a pretty good chance that the fact that the president has kicked things down the road, President Trump, the fact that he's been as open as he's been to a deal on TikTok, the fact that he's allowed NVIDIA to export advanced chips. This suggests to me that he wants to deal with China. My own guess is, I can't prove this, is that the United States and China, to some extent, got to a place in their economic relationship more by events than by design. The United States introduced tariffs, and then China reciprocated in ways that other countries didn't. So there was an escalation at the outset. And now they're beginning the long, slow process of unraveling that, of climbing down. But I fully expect there will ultimately be a trade deal. And to me, the real question, I don't have the answer to it, is whether it is a trade deal or part of a larger U.S.-China deal in which other elements enter as well. And that's possible.
What could be those other elements? Like I mentioned in my intro that China has been asked to be potential security guarantor in the Ukraine. Would you throw that into the mix as well?
No. First of all, I don't see anything to guarantee in Ukraine. I am, shall we say, profoundly skeptical of the prospects for having any agreement to guarantee. And I don't necessarily see China being involved in it because China's not, shall we say, been a neutral party here. It has been helping Russia in all sorts of ways. So no, I don't see China playing a role there. And as I said, I'm not sure there's going to be anything to work on together.
Now, it's interesting. Like I've just picked up in a headline here as well. The U.S. has been sparring China from sanctions in regard to importing Russian oil. Now we're getting really granular on the economic side here, but it's been chasing down India. Like we've been putting heavy sanctions on India. Where's the discrepancy coming from? Does the U.S. see China as a stronger partner, or not partner, but stronger? What do you call them? Opponent, like for lack of a better term here.
I think there's different reasons, but your observations, unfortunately or fortunately, however you look at it, it's correct. In terms of China, I think the United States is very wary of confronting China with tariffs because China then has the option of cutting off rare earth exports. The United States is too dependent on China for supply chain issues right now. So there's that. And also, as we were just discussing, I think President Trump is optimistic or hopeful, maybe is a better word, that he and China, Xi Jinping, can strike a deal. So I don't think the United States is looking to add more complications to its economic relationship with China. The fact that we are tariffing India as much as we have, I find truly unfortunate. It's not that India isn't protectionist, it is. It's not that India isn't buying oil from Russia, it is. But to be so confrontational with India threatens what's been, several decades of careful knitting together of a U.S.-Indian strategic relationship, in part to give China more to think about on its other flank. India is also a growing economy in the world. I think it's a question of when, not if, it becomes the world's third largest economy in the world. Been a lot of speculation about why the United States is taking this position, a lot of talk about connections between the U.S. and Pakistan. But again, I just think it's unfortunate. But I think coming back to your question, we're clearly stuck in a confrontational approach to India. And my guess is we want to shield China from that. Again, President Trump wants to meet with Xi Jinping and see what it is the two of them can produce.
Yeah, it's interesting. I've been calling India a bit of a Trojan horse within the BRICS because up until recently, until the tariffs have been put on India, they were a close ally of the U.S. as well. within the BRICS? I think India is trying to play both sides, China and the
India,
US.
I would take issue. I mean, I would never call India an ally. India's always kept its strategic independence, but it was strategically affiliating itself more with the United States than it has in the past. But India always keeps its options open. It did during the Cold War. It does in this year. Again, what's striking, though, is how the relationship has taken a turn for the worse. That is not something that a lot of people see coming. And again, I think it's unfortunate, but if you're China, you'd say that's one of the positive things. To use an old Soviet notion, the correlation of forces, I expect China likes it when the U.S.-India relationship suffers. China likes it when the war in Ukraine goes on. China likes it when the United States and Taiwan have issues. All these things are pretty good for China.
It definitely plays into their hand, strengthening the role within the BRICS, becoming the capital C in there, which is really interesting. Richard, like maybe the last couple of minutes, let's touch on markets again. Let's come back to implications on markets. S&P 500 near record highs again, 6,400 points. Rate cut expectations high, although they're shrinking on a daily basis. You're only 73% now expect to cut in September. But what do you make of the markets right now, and how should we try to understand them?
Look, I tend to agree with those. Look, by any historical measure, markets are pretty high. It's been a favorable rally. A lot of good things are priced in, including rate cuts. My own guess is there will be something in that direction, but less than perhaps some in the administration want, less than the markets expect. But all things being equal, and you look at the market in the short run, you'd have to say there's more downside than upside. But again, I wouldn't take my take on it more seriously than people who are more expert than I am. I don't see at the moment any geopolitics that will particularly affect the market. As I said, I think that I don't see anything imminent in Asia. The Middle East is churning. I'm skeptical of what's going to happen between Russia and Ukraine, but I don't think that that's particularly priced into the markets one way or the other. So I think what the markets are reacting to are general economic performance, tariffs, inflation, Fed behavior, and that's a pretty familiar conversation.
I know you've been following new technologies quite a bit and the impacts on our society and what we're looking at here. Can you give some pointers? Like, what are you excited about, and how will it shape the world moving forward?
Yeah, there is a lot going on in new technology. I was at an interesting conversation the other day. AI is. You can be talking about what you had for breakfast, and sooner or later AI comes into the conversation. It's hard to escape these days. And we were talking about the debt. And there's always been a school of thought of people who said, don't worry about the debt that much. American economy will grow out of it. Well, all things being equal, we won't. But what struck me the other day was what you might call the AI bulls. And they were saying that AI is going to be such a strong source of economic growth that could actually change the calculation. And the idea of having sustained 4 or 5% growth is no longer inconceivable because of AI. So that to me was just one of those interesting things that had entered the conversation. But clearly, AI, things going on in biotech, in science every day. Look, I'm a technology optimist. Think of the last great crisis we had, which was COVID, the pandemic. Well, we got through it in remarkable shape thanks to two technologies. One was obviously mRNA vaccines, which were effective and safe and dramatically shortened the lead time you would need for a vaccine. The other technology, which doesn't get the credit it deserves, is a version of what we're using here, which is Zoom. That essentially people could communicate, wouldn't have to go into the office, they wouldn't have to be in physical proximity with all the risk that had for disease transmission, but they could still have professional and personal lives. And we simply wouldn't have gotten through the pandemic, again, without mRNAs and without Zoom. So I'm something of a technology optimist in terms of how we're going to weather some of the inevitable storms going forward.
Yeah, let me one last question here, maybe 30 seconds or less. But do you see ourselves increase productivity as much to grow out of the debt situation, or at least decrease the gap again?
Quite possibly. I wouldn't count on it, but it doesn't mean I wouldn't get serious about thinking about how to deal with the debt. But yeah, that could be the wild card there, that productivity and growth. at least could ease the debt challenge and give us a lot more space and time and cushion. That's the optimistic side.
Absolutely. Fantastic. Richard, it was a great pleasure having you on the program. Like, where can we send our audience to follow more of your work? And we need to have you back, by the way.
Love to be back. Thanks for asking. Look, I put out a newsletter every week on Substack called Home and Away, in which I discuss domestic developments in the United States. That's the home side. Away, I discuss American foreign policy and international developments. You can't beat the price at the moment. It's free. So if people want to subscribe to Home and Away, that would be great.
Fantastic. Yeah, we'll definitely link to it down below. And Richard, it was great to have you on. Have a wonderful weekend. We'll definitely need to catch up later this year and see what the latest developments are. What is the Fed doing? What is happening on the geopolitical side? Have a wonderful weekend. Thank you so much. And everybody else, thank you so much for tuning in to Soar Financially. I tremendously enjoyed the conversation here with Dr. Richard Haass. If you did as well, go follow his Substack, Home and Away, but also leave a like, leave a comment down below. And if you haven't done so, hit the subscribe button. It's a free way to support us, and we tremendously appreciate it. Thank you so much for tuning in. Take care out there.